It's a tax provision that could prove costly for schools, police forces, drug treatment centers and other state and local public services. The sweeping tax overhaul embraced by President Donald Trump and Republican lawmakers would impose a $10,000 limit on the combined sum of property and state and local income taxes that a household could deduct. The $10,000 cap will help pay for corporate and personal tax cuts totaling $1.5 trillion over the next decade. Conservatives have argued that unlimited state and local deductions amount to a federal subsidy for the wealthy in high-tax states like New York, New Jersey, and California. But many middle-class families in those states face disproportionately high housing costs and depend on deducting their state and local taxes. These households could soon pressure states and localities to ease their burden by cutting taxes, which would likely force cuts to social programs and public services. Some Republicans in high-tax states resisted their party's cap on local and state deductions. Two of them, Reps Darrell Issa of California and Lee Zeldin of New York, opposed the overall tax measure because of the likelihood that it would hurt their constituents. And despite Republican arguments to the contrary, high-tax states already tend to send more money to Washington than they receive back in federal spending. On balance, this bill remains a geographic redistribution of wealth, taking extra money from a place like New York to pay for deeper tax cuts elsewhere, Zeldin said. This bill chooses winners and losers in a way that could have and should have been avoided. More than 73% of homeowners in Westchester County just north of New York City face property taxes alone that exceed $10,000. This means they couldn't deduct any state or local income taxes. The same is true of half of Manhattan homeowners, a quarter of those in San Francisco, 17% of suburban Chicago homeowners, and 10% of those in Arlington, Virginia, just outside of Washington, D.C., according to figures tracked by Atom Data Solutions. Republicans are on the verge of passing a massive tax cut for businesses that is deeply unpopular with the American public. They are doing it with no Democratic votes and at a moment when the U.S. economy looks pretty healthy. Typically, tax cuts are most effective when the economy is struggling. Republicans are on the verge of passing a massive tax cut for businesses that is deeply unpopular with the American public. They are doing it with no Democratic votes and at a moment when the U.S. economy looks pretty healthy. Typically, tax cuts are most effective when the economy is struggling. The limit on the deduction could lead taxpayers there to demand lower taxes or to reject any additional funding requests for state pensions, schools, public safety and health services. What's more, a separate provision in the Republican tax bill would no longer subsidize employers that help their employees pay their commuter costs. This change will likely increase the cost of public transit for riders. The overall tax bill would impose new costs on many taxpayers that would outweigh any savings on federal taxes, argues Matthew Chase, executive director of the National Association of Counties.